If you're starting with exactly $0 today, you have the opportunity to build a financial system that places you a decade ahead of the average adult. This is the Wealth Stack, a highly systematic, step-by-step financial engine that is built from the ground up to operate completely automatically. If you're under 18, you must follow these steps as you hit each age milestone. If you're already an adult, treat this as an immediate checklist for your current accounts. Transitioning from zero assets to an automated wealth-building engine creates a foundation where your passive growth can eventually exceed your daily living expenses. At age 13, you aren't legally old enough to trade on your own, so your first move is asking a parent to open a custodial account, like a junior ISA or a UGMA in the States. For parents watching, these accounts are controlled by you for the minor's benefit, ensuring the money is managed safely until they are of age. Rather than trying to pick individual winning stocks, you should put this money into a low-cost S&P 500 index fund, which bundles together 500 of the largest public companies in the US. Modern brokerage dashboards make this simple. Once the account is funded, you just locate the index fund and let the growth trend begin. Starting at 13 secures the most difficult variable in any financial formula: time in the market. Between ages 14 and 16, your goal is generating seed money. This means requesting cash instead of physical gifts and taking on a basic part-time job or a Saturday shift. This cash isn't for buying video games or clothes that lose value. Think of it as a launchpad for your future income. Use your launchpad money strictly to buy skill-building equipment. Physical tools are generally a better investment than generic online courses. For example, spending $500 on a used computer allows you to learn high-value digital skills like video editing or graphic design. Possessing your own equipment allows you to convert your free time into professional services that businesses will pay for. As soon as you hit the legal age, apply for your provisional driver's license and pass your test. Relying on public transport can appear unprofessional to clients. A cheap, cash-bought starter car unlocks reliable access to high-paying side hustles. Never finance a vehicle. Millions of adults are currently trapped in debt cycles because they borrowed money for a car they couldn't afford. Real estate is often considered good debt because it can grow in value. Car financing is toxic because you are paying interest on an asset that loses value every single day. Avoiding early consumer debt prevents you from entering your 20s with a massive financial weight holding you back. The day you turn 18, you must build the Adult Master Stack, a trifecta of accounts that form your financial foundation. Account 1 is a no-fee checking account. This is strictly for the daily money flowing in from your work and out for your basic expenses. Account 2 is a high-yield savings account at a separate bank. It holds 3 to 6 months of expenses and earns 4% interest. Account 3 is a credit card. Use it only for normal expenses you already have to cash for and pay it off in full every single month without fail. Think of your credit score as an Uber rating for your money. Building excellent credit now ensures you'll be offered lower interest rates on future loans, like a mortgage. Dividing your cash into these 3 buckets separates the financially mature from those who live paycheck to paycheck. Now, open a tax-advantaged investment account, like a Roth IRA or an ISA, to shield your future profits from the government. Modern apps allow for fractional shares, meaning you can set up an automated, recurring monthly purchase of the S&P 500 for just $1. Investing $250 monthly, starting at 18 with an 8% return, could grow to $1.5 million by retirement. Waiting just 10 years to start leaves your final balance at less than half that amount. Time, not income, is the ultimate multiplier. Automating early investments ensures your capital works significantly harder than you ever could through a salary alone. This is your completed wealth stack. You have the skills to earn, the accounts to save, and the automation to invest. With the system built and automated, your only remaining task is to feed it with cash. Focus your time on scaling your service-based side hustle or pursuing a high-value apprenticeship that pays you to learn. Comment below with how many steps of the wealth stack you've completed so far, and subscribe to keep building. By implementing this stack now, you put the math of compounding on your side before you've even faced your first adult bill.